recognize the real offers that are sitting on the book, 68.50s. And that we've been able to sell against those offers several times already this morning. The guys will know that because we did a spread trade against it. So inside these areas, you can do a lot of work. Sell comes off to that demand. The demand is there because it takes out that supply, so that's correct. And there's obviously an opportunity potentially to buy there. The price comes up, comes back down. Not sure what this sell is here. It's possibly just the same as the same idea as that, the weak minor buy here. So this would be a half-back sell here. So you can see this, the high swing, the low swing, the half-back sell coming away, but it's certainly not a supply area at that stage. So that's the only one that's not confirmed as a possible supply. The reason why I think experts put it in a supply is this little sell-off. If we zoom in a little bit, you'll be able to recognize a little sell-off that happened just before it. There was a lower low, a lower high, and a lower low phase through this phase here. I don't think I could agree that any of those are sellers at lower prices to put that supply into place. So I don't think the supply has moved any lower at that stage. It's a half-back trade, absolutely. So if you had value, I would be selling off this for sure, because it's a half-back. When it takes out this area, of course, that becomes supply at that stage. Absolutely. Becomes supply at that stage. And as you go forward to the conclusion of this chart, you can start to see the supply comes out. It fails to reach the demand at the bottom edge. The price goes back up, starts testing into that area. When it takes that area out here, this becomes demand here. And when the price goes and takes that area out, this becomes demand here. So remember, the demand comes in at these stages here. So you can see again, Eckbert's done exactly the same thing as he did the last time over here. You can see because there's supply with supply with supply, he's drawn an area there. He's drawn a line suggesting that there is an area of supply. It's not a single price. And like I said before about the oil charts, you try and find the real buyers or the real sellers in those kind of combined areas. Well, he's done exactly the same here. He's drawn an angled line suggesting that this is a kind of confluence of demand in this area. As a result, he's not sure where the trade is, but he's now looking for the buy trade. And that's what you should be doing in these areas. You're looking for the buy trade. So depending upon how fast the price drives into those, and you can see it was quite a fast drive down, you'd imagine it's not going to be the first demand area. So you're probably already defaulting into this lower price because of the speed of the move down. That gives you a brilliant opportunity to buy into this area, and what a fantastic outcome from that trade. When the price breaks the highs of this top edge, then this becomes a demand area here. Absolutely. You can see that that results in a perfect opportunity to buy it. And obviously up the top edge is just well, there's no supply at the top edge until the price drops down, in which case there's now new supply at this price here. So that supply area is just missing for the time being, but I'm sure because it's just getting put in. This price comes back to the half-back trade area here, comes back down. This demand does not get removed, but obviously it's an area again. And because it's an area, you're obviously going to be watching this failure to auction here, and the high probability again that on this occasion, you'd be looking at this and saying, well, I think it's probably going to be somewhere in here. We're looking for a high volume, big candle potentially to lean against. And then obviously inside that demand, you're obviously going to be watching that. Now, because the price takes out this demand here, the supply moves south. And again, the next supply line would be getting put in against this bracket area just here. So now the chart, the drawing is perfect. I think there's the vast majority of that is absolutely spot on. There is no right and wrong answer, of course. There's only your answer. There is nothing wrong with any of those lines. And the point about the supply-demand idea is that it's an area, it's an idea, isn't it? That's all it is. It's an idea. My idea is that I'm going to be looking at this as a possible previous demand, and I can see that the value is improving at that previous demand. So there's definitely going to be buyers resting in that price. So based on that point, I want to be doing business. But at least now you know where the demand was, and there's likelihood of demand coming back in at that same price is very high, because when you're sitting on a bank desk, if I bought at 50, guess what? I'm probably going to be buying at 50 again if the value is better this time, because the algorithms, the models that banks use will suggest that 50 was a good buy price before. If it's better now, I'm going to buy 50 again. And that level is great. That level is fantastic. So I think there's absolutely nothing wrong with what you've done. It's great to see areas developing on their screens. But if you combine that with value and real liquidity, suddenly those real liquidities and those big volume pops and those fat tails and the various other things that happen in these areas that can give you big opportunities to flip a price can start becoming incredibly valuable, can't they? I mean, if you combine a fat tail in a demand area, you start saying, wait a second, that is absolutely beautiful in terms of trade opportunities. Let me just see if we can understand one example. You guys know that the RGL from yesterday was 97.98 approximately, right? 97.98, all good? So you know there's an RGL sitting there. You can see that as a buy side, sell side level. But what else does it become? What else does it become? Does it become demand? Yes. Why does it become demand? Well, because if we're starting to work on the right-hand side of our charts, we can see we take out these areas here, and obviously the price carries on up. So you can see it goes up once, twice, 3 times it's gone up at that stage. So I know with 100% certainty that there's demand at this price. Supply becomes demand. So I now know there's demand at this price. Now, if there's demand at that price, the chances are that's good. We can mark it off on the screens. If I now look at the idea of fat tails, what happens if the price were to trade into that area with a fat tail opportunity with big volumes? Does anybody see a fat tail into demand with big volumes? You see that, Egbert? You see that confluence of information that gives you an idea? A thought that that huge volume is possibly demand? And you say to yourself, well, you know what? That's crazy, right? That's crazy. If I've got demand in that area and I get a fat tail, and then I get a huge surge of volume, that's got to be that demand again. Surely, to goodness, that's got to be that demand again. I'm not asking you to buy it on the way down. What I'm asking you to do is recognize that that exists in the first place. If you can recognize it exists, you've got an opportunity to start working bids against that area, against a lean, because if it keeps going sell side, well, so be it. You let it go sell side. But at least you've got an opportunity to start thinking to yourself, I'm going to start buying that 97 quarter, 97 half, 97 3 quarters, 98s. I think I've got demand in this area. I've seen a very good auction off of this price. I've got a very fat tail, and massive buyers have shown up in a demand area. What the hell is that all about, right? Well, what happened to that trade? It wasn't that long ago, guys. It was at 20 past 12 this afternoon. So what happened to that buy trade? Could that have been your one trade of the day, Egbert? Of course it could. Could you have been happy with that as your one trade today? Based on demand, fat tails, and volume confirmed? Would you have been delighted to have had that trade and went 98s to 03s for 5 points and $250 per contract on a 5 lot? You've just done over $1,000 profit, of course, right? Absolutely no reason why you wouldn't have been absolutely ecstatic about that as an opportunity. So you can start to recognize the incredible opportunities that these things present. You don't need to find an awful lot of these deals. But when you get a confluence of demand, fat tails, volume pouring in behind the trade, and you say, well, if that's not demand, I don't know what is. That's not a demand opportunity. I do not know what is a demand opportunity. No idea. And obviously you've just seen a little fat tail at the top edges developing with some pretty meaty volumes. And you say, I'm going to take half my position off at this stage. I like what I've seen. That is a good outcome. If it goes, it goes. You do not need to trade 500 times a day to make the big monies, guys. You just need to find these incredible types of trades right here. Fat tails, massive volume in a demand area, and we've not even added a value line. So obviously you could start looking at some value lines behind that to see if anything stacks up. And obviously it's too soon to be getting a solid read on the likes of our specialists. So you'd really have to default to things like the movement of, for argument's sake, the movement of the ABCs, which is a great line to use. Obviously we could also look at well, we could look at lots of things, but let's just put the ABCs on the charts for a second. If I'm going to compare this, and I now do these, if I now do this equation here of 6C1 times the 6A1, and I now look at that as a relationship to the risk-off flow cash currencies, which is the 6J contract and the 6S contract, then obviously what I've now got is I've got a Forex risk line. I've now got a Forex risk line, and based on that Forex risk line, if I added that to the chart, Egbert, can you think that that would give us a real strong confirmation that that demand is real? Let's take a look and see if that can be added to the charts and see if demand shows up. If I add that to the charts, and we look at the overall shape of that, does that confirm that demand is absolutely on point? I think we could all agree that it definitely does confirm that that demand is absolutely on point. It's crazy, right? Absolutely crazy how good that trade is. So when you think about it, look at how deep that discount is. Look at how deep that discount is. And look at how much value you've got on a macro and a micro scale, even on a micro scale, guys. If you're comparing the last demand with the current demand areas, this flat line here, the lowest low was here, that does have an upside. Definitely has an upside. And the macro, that price should be above the top edge of today's marketplace. So you can see that that is your trade of the day right there. Potentially your trade of the day right there. And obviously if it takes off, it takes off. Now what else is it? What else could I add to that narrative, Egbert? Because now you've done your supply and demand, you've taken the first step into drawing these ideas. What else could I think about? Well, it's the RGL, of course, from the overnight session. What else? Come on, guys. Should be very, very, very obvious. What else? I say it should be very obvious. It's obviously not that obvious. Somebody help me! Somebody tell me what's really obvious in that chart. Pam says a measure. Could be a measure. Does nobody see a halfback? Does nobody see that that's a halfback area? Right in the middle of the highs and the lows. So when you're looking at that chart, does nobody see that structure? Now, obviously, that's what Pam was suggesting, was that we are going for a measure off of a halfback trade. There's your halfback trade right there, isn't it? So you're already aware that there is a structure to this chart right here, isn't it? You're already aware of that structural element right there. And you're already looking at that structural element and you're saying, okay, I know where we could be going to, and I know where we could be seeing. We've got to be aware of where the highs and the lows are in any phase. Why would we need to be aware of the highs and the lows? Well, who was in yesterday's classroom? Who was in yesterday's classrooms? Why would we need to always know where the high and the low is? Because in yesterday's classrooms, we talked about this little fella here. In yesterday's classroom, we talked about that fella, didn't we? In yesterday's classroom, we talked about this narrative here, didn't we? So therefore, when we're looking at a marketplace, and I look at a market that's done this, I should always know where this point is, shouldn't I? I should always be aware of where that price is. Because this is where the institution will be a buyer, and this is where the institution will be a seller, won't they? This is the whole point of profile. So obviously, as a retail trader, your job is to try and be a seller in this area as a retail trader. And your job as a retail trader is to try and be a buyer, obviously, in this area. That would make an awful lot of sense. Preferably, obviously, adding a bit of stop run liquidity if you can. Absolutely. So you can see how we can take Egbert's chart of supply and demand. We can add in a fat tail. We can add in a bit of structure. We can add in a value line. We can add in, obviously, our volume analysis. And we can end up with a trade that's just gone on to make a huge profit. It's went from 98 to a high price now of 0.6 for 8 points or $400 profit per contract. A 5 lot has just made $2,000 off of a perfect halfback trade halfback trade buy. $2,000 on a 5 lot, guys. $500 per contract. That's you. You're finished for the day. You've got your trade. You've found your level. You've found your narrative. You've found your value. And you've made absolute mincemeat of the markets. And that's all you can do, Egbert. So great job. Appreciate it.